Okay, let's unpack this. You probably remember Wiley as the company responsible for that impossibly heavy, like 500-page organic chemistry textbook you had to lug around college.
Oh, yeah, everyone remembers those things, just absolute bricks.
Right. But today, we're doing a deep dive into their June 2026 earnings presentation. And honestly, this centuries-old paper publisher is quietly executing one of the wildest pivots in modern business.
It really is a phenomenal transformation to witness. I mean, we're talking about an institution that has survived, every major media shift over the last 2 centuries.
From print to digital, and now straight into artificial intelligence, because they are becoming this massive, highly lucrative engine for the global AI economy.
Exactly. And what's fascinating here is how they are navigating this leap from digital text to algorithmic training data. Because in the current AI landscape, the actual algorithms, the coding architectures, are rapidly becoming a commodity.
Because everyone basically has them now, right?
Yeah.
Like every tech journey has the code.
Right. Just about every major player has access to massive computing power and highly sophisticated language models. The true scarcity, the bottleneck that is keeping tech CEOs up at night, is finding verified, peer-reviewed data to actually train those models.
Yeah, because you can't just train a medical AI on like random Reddit threads or blog posts.
Exactly. You need authority. And that authority is exactly what Wiley has stockpiled over decades.
And you can really see the desperation for that authority in the financial numbers. I mean, the money moving around in this deck is just staggering.
Absolutely.
Like Wiley's AI revenue grew a staggering 23% this past year. That brings them up to $49 million.
And their lifetime revenue from these AI partnerships just crossed the $110 million mark, which is huge.
Right, but the metric that really jumped out to me is the recurring revenue. They have built this $8 million base of recurring AI licensing revenue, and they were projecting that specific slice to grow 2 to 3 times over.
Which is textbook exponential growth.
Exactly. I mean, if building large language models is the new gold rush, Wiley isn't out there mining for gold. They are selling the high-tech shovels. Or, if
Yep.
AI models are race cars, Wiley owns the refinery that makes the high-octane fuel so the engines don't blow up.
That is the perfect way to look at it. And it answers a big question about their sustainability, because they aren't just having some fire sale of their archives for a quick buck.
Right, they're not just emptying the vault and walking away.
No, not at all. The presentation explicitly refers to this concept they call gold in, gold out. Right now, the Achilles heel of generative AI is hallucination.
Right, where the AI just confidently makes things up.
Exactly. Because large language models essentially work by predicting the next most likely word in a sentence, they are really prone to inventing facts if they don't have a hard authoritative grounding to pull from.
So to fix that, the tech companies desperately need structured, factual content to act as, like, a boundary line for the AI.
Precisely. And Wiley realized they do not need to build their own multi-billion-dollar AI platforms to capitalize on this. Instead, they are utilizing what they call a capital light model.
Okay, meaning they are just licensing the proprietary content they already own. Like, they don't have to build giant server farms somewhere in the desert.
Right, or hire thousands of machine learning engineers. They currently have 4 major LLM training customers plus 19 corporate subscription customers spread across life sciences, engineering, and finance.
So it requires almost zero new capital investment from Wiley.
Exactly 0. They are taking an asset they have already paid to acquire, edit, and publish, and they were just monetizing it multiple times across this expanding ecosystem of tech partners.
It's brilliant, honestly, and they illustrate this in the deck with something called the Wiley flywheel, which it starts with their traditional publishing arm, right, that feeds content and data into their massive archives.
Right, and then that validated content fuels their AI and analytics tools.
Yeah, and those tools power better intelligence for researchers, which then, in turn, accelerates the creation of new peer-reviewed research, which feeds right back into the publishing arm.
It is a totally closed loop of value creation.
It really is.
Yeah.
But, okay, knowing that Wiley is acting as the refinery feeding the AI beast, it really begs the question, what exactly is this highly valuable, high-stakes crude oil they are pumping out?
Well, you have to look at the specific domains where Wiley holds dominant positions. We are talking about leading market shares in over 150 disease areas, 100 chemistry areas, plus advanced engineering and materials science.
Okay, wow, there's a massive footprint.
It is. And crucially, this isn't just generic text. They are selling structured metadata. It includes validated research protocols, which means the AI isn't just learning what a study found, it is learning the methodology of how the study was designed and conducted in the first place.
Right, the actual mechanics of the science.
Exactly. And furthermore, it includes decades of peer review signals, citation networks, and reference graphs. So when an AI needs to understand the complex connective tissue between, say, a chemical compound and a biological reaction, it relies on those exact citation networks that Wiley has meticulously curated.
Okay, and the deck zeroes in on one very specific type of data that is seeing explosive, like almost unbelievable growth right now. They call them clinical outcomes assessments, or COAs.
Yes, the COAs are fascinating.
Right. And if you are wondering what a COA actually is, think of it as the black box flight data of a clinical trial. It's the raw patient-reported outcomes, like how a patient actually feels, functions, or survives during a medical trial.
And that kind of data is highly fragmented.
Incredibly messy, but it is absolutely vital for survival in the pharmaceutical industry. And the financial growth here is just wild. Wiley's COA revenue skyrocketed from just $700,000 in fiscal year 2021 to $11 million in fiscal 2026.
That is a massive leap.
It is. But wait, here's where it gets really interesting, and I'm kind of stuck on this. Google and Microsoft have practically infinite computing power, right? And web crawlers that scan the entire internet every single day. Why are they writing massive checks to Wiley for this data instead of just scraping the internet themselves?
It comes down to the fundamental difference between consumer AI and high-stakes AI.
Okay, what do you mean by that?
Well, if you want to train a chatbot to write a polite customer service email or, summarize a chocolate chip cookie recipe, you can absolutely just scrape the open internet. The stakes are incredibly low if the model makes a mistake.
Right, if it messes up the cookie recipe, nobody dies.
Exactly. But you absolutely cannot rely on scraped internet data when an AI is being deployed in a clinical workflow.
Right.
Or when it's being asked to synthesize medical evidence for cancer diagnosis, or attempting to accelerate a multi-billion-dollar pharmaceutical trial.
Yeah, that makes perfect sense. AI cannot substitute scientific evidence in those high-stakes use cases.
No, it requires it as a baseline. The tech giants need Wiley's validated research protocols to prove to regulators and hospitals that their AI tools are actually safe, compliant, and grounded in reality.
Which really puts into perspective the absolute powerhouse list of tech partnerships they've recently announced. Like, they're working with AWS to integrate peer-reviewed research into Amazon's agentic AI framework.
Right.
And they partnered with Anthropic, becoming the very first publisher to integrate scholarly content directly into the Claude AI platform. Plus, they signed massive agreements with Microsoft to bring this evidence directly into clinical workflows and with IQVIA to expand their footprint in that COA market we just talked about.
And the Anthropic partnership is particularly revealing, I think. By integrating directly into Claude, they are bypassing the traditional search engine entirely.
Oh, wow. Yeah, that's a huge shift.
It really is. And the presentation includes a quote from Daniel Nadler, the CEO of Open Evidence, which is a company Wiley now holds an equity stake in, by the way. And his quote really gets to the heart of the value proposition here.
What did he say?
He notes that a massive gap between published research and actual on-the-ground clinical practice has persisted for decades because doctors simply do not have the time to read thousands of new medical journals every month.
Of course not. They're busy seeing patients.
Exactly. But by partnering with Wiley, AI developers are finally able to put peer-reviewed evidence directly into the physician's daily workflow, answering complex medical queries in real time with cited, verified sources.
Wow.
And that is simply not something a tech company can achieve with clever code alone. They absolutely need the ground truth that publishers control.
Right. So knowing that this highly specialized clinical data is proving to be so lucrative, it makes perfect sense why they are aggressively expanding. But that brings me to their latest M&A move, which I really want to push back on a bit.
You mean the Emerald Publishing acquisition?
Yes. Because the deck outlines that they acquired Emerald Publishing for £337 million, which translates to roughly $452 million US dollars.
Right. It's a massive purchase.
It is. And it brings 485 journals, 8,000 books, and 500,000 backfile assets into the Wiley ecosystem. But here's my question for the listener. Why drop $452 million on a publisher known primarily for social sciences, business, and economics right now? I mean, does a large language model really need to ingest 50 years of sociology papers?
It is a counterintuitive move at first glance, I agree, but it reveals exactly where artificial intelligence is heading next.
Okay, how so?
Well, early AI models were entirely focused on basic language comprehension and generation, and the current wave, as we just discussed, is heavily focused on scientific and medical synthesis.
Right, the healthcare and STEM stuff.
Exactly. But the next frontier involves AI models evolving into autonomous agents. And these agents will increasingly be asked to reason about complex markets, to understand human decision-making processes, and to model intricate economic behaviors.
Oh, I see. So AI is rapidly moving into, like, the corporate boardroom and the financial sector.
Yes, and public policy planning too. By acquiring Emerald, Wiley is aggressively extending their data advantage from the hard STEM fields straight into the social sciences and business management.
So they're basically building an incredibly wide moat, like an uncrossable moat that competitors simply cannot match.
Precisely. If an AI developer in the near future wants their model to understand both the molecular composition of a new pharmaceutical drug and the global economic market dynamics of how that drug will perform upon release.
Wiley is positioning itself as the single, indispensable point of contact for all of that verified data.
Exactly. And when you look at the financials of the acquisition, they are structuring this very efficiently. The deck notes, they paid what Wall Street calls a 7x adjusted EBITDA multiple for Emerald.
Okay, that sounds like a lot of financial jargon. What does that actually mean for the company?
Essentially, it means they paid a premium up front, but they expect to achieve $30 million in run rate cost synergies almost immediately.
Meaning they're trimming overlapping corporate costs.
Right. By moving Emerald's customers onto Wiley's existing tech platforms, they expect this acquisition to not just pay for itself, but to be accretive to free cash flow in year two, meaning it actively adds to Wiley's cash pile very quickly.
And Emerald boasts a 99.6% customer retention rate, which is just insane. That means Wiley basically just bought a guaranteed, highly loyal revenue stream.
It is a brilliant example of disciplined portfolio allocation. They are taking the cash generated by their mature legacy businesses and using it to buy highly recurring, high-margin assets that instantly plug into their new AI licensing engine.
Okay, so this aggressive M&A and AI expansion is super impressive. But this brings us to the financial performance for the overall company this year. And we really need to reconcile some conflicting numbers here.
Yeah, it really is a fascinating tale of two businesses living under one roof.
Completely. Because when you look at the actual bottom line for fiscal 2026, overall adjusted revenue for the company was totally flat, like literally 0% growth. They brought in $1.67 billion, which is essentially the exact same as the previous year.
Right, plus 1% on a constant currency basis, but effectively flat.
So if their AI and research data is so incredibly valuable and they're signing these massive deals with Microsoft and Amazon, how on earth is their overall revenue completely flat? Are they dragging a massive anchor here?
This raises an important question, and you're right to point it out. They are absolutely managing two divergent trajectories, and the flat top-line revenue is just the mathematical result of those two forces colliding.
Okay, so break that down for us.
So the research side of the business, the engine driving this new AI future we've been discussing, is performing exceptionally well. It grew by 4%. And the leading indicator of future revenue, which is article submissions, was up an incredible 25%.
Wow, okay, so the top of the funnel is packed.
Exactly. But the learning side of the company, which is their legacy academic and professional textbook segment, dropped by 7%.
Ah, there's the anchor.
Right. They are facing significant market challenges there, including lower print revenues, a shrinking footprint in traditional higher education, and lower AI licensing in that specific segment. So the future is growing, but it is growing just fast enough to offset the structural decline of your past.
But the profit story underneath that flat revenue is what really caught my eye. Even with zero revenue growth, their core operational profitability, their adjusted EBITDA, grew by 10% to $440 million. How do you squeeze 10% more profit out of a company that didn't sell a single dollar more than it did the year before?
By fundamentally changing how the company operates and being absolutely ruthless with capital reallocation, they slashed corporate expenses by 15% overall.
Wow.
And a staggering 22% in the fourth quarter alone. The mechanics of how they achieve this are fascinating. Historically, legacy publishers spend a massive amount of their budget simply keeping the lights on.
Right, maintaining servers, old websites, that sort of thing.
Exactly. In the past, 30 to 35% of Wiley's entire tech budget was spent just maintaining outdated legacy systems and managing technical debt. But over the last year, they executed a major tech transformation, shifting that ratio so that 50 to 60% of their tech budget is now dedicated entirely to product innovation.
So building out these new AI capabilities instead of just fixing old bugs.
Exactly. They retired old systems, consolidated their real estate facilities, and started heavily utilizing AI internally across their own legal, marketing, and operations departments to drive permanent cost savings.
So they are purposefully managing the slow decline of the legacy textbook business, aggressively cutting the operational fat, and funneling all of that saved cash directly into the high-margin research side.
Yes.
And that strategy is generating a mountain of actual cash. I mean, they reported a record free cash flow of $195 million, which is up 55% from the prior year.
It's a huge jump.
And they aren't just sitting on it either. They returned $174 million to shareholders, which included buying back a record $100 million of their own stock. Plus, they increased their dividend for the 32nd consecutive year.
And that cash flow metric is really the ultimate proof of concept for the capital light model we discussed earlier. When you license data you already own, your profit margins expand dramatically. They are generating significantly more cash without needing to build new physical supply chains or print more books.
Right, it's just pure high-margin software economics.
Yeah.
But perhaps the most telling signal of where Wiley is heading next isn't actually found in a financial metric at all. It's found in a human capital metric. Because we have to talk about who they just hired to lead their entire research division.
Yes, the Jessica Kowalski hire is a massive deal.
It really is. They brought her in as the new executive vice president and general manager of research. And her resume is incredibly telling. She didn't spend her entire career editing academic journals or, managing university textbook sales. She was poached directly from Microsoft.
Right, where she held full financial accountability for a large-scale global AI, data, and cloud services business.
Exactly. And before her time at Microsoft, she led data and analytics partnerships at Amazon Web Services.
When a legacy publisher hires a senior tech executive from Microsoft and AWS to run its core growth division, it is the loudest possible signal to the market. They no longer view themselves purely as a traditional publishing house. They view themselves as a technology and data company.
Completely. And Kowalski's background is particularly relevant because before big tech, she spent over a decade at RELX, helping transform brands like Elsevier and LexisNexis from traditional content publishers into massive information analytics companies.
Which is the exact playbook Wiley is executing right now. But they're supercharging it for the generative AI era. They're bringing in leadership that speaks the exact same language as the tech giants they're selling their data to.
It is a phenomenal repositioning. So let's briefly recap the journey here for you. Wiley has successfully navigated centuries of technological shifts, and by utilizing this capital light model, they've turned their massive archives into the essential fuel for the modern AI economy.
Right. They are solving the hallucination problem for the biggest names in tech and expanding their data moat with the Emerald acquisition.
Exactly. All while managing the decline of their traditional textbook business and rewarding shareholders with record cash flow in the process. It's really impressive.
It is a masterclass in leveraging an existing asset base in a completely novel way. They recognize that the value wasn't in the paper the research is printed on, but in the authority and structure of the data itself.
Right.
And by positioning themselves as a definitive source of that ground truth, they ensure they remain relevant regardless of which tech company ultimately wins the AI arms race.
Absolutely. But as we wrap up this deep dive, there is one final provocative thought that I want to leave you with. It isn't explicitly laid out in the earnings deck, but it feels like the inevitable next chapter of this story.
What's that?
Well, we are watching Wiley feed all of this incredibly valuable, human-generated, peer-reviewed gold into these massive AI models to make them exponentially smarter, right?
Right.
But what happens when the AI eventually becomes capable of conducting, synthesizing, and generating its own novel research? Like, will the algorithms eventually outgrow the need for the human-generated data that Wiley is currently supplying so profitably?
That is the big question.
Yeah. Or will the messy, real-world process of human peer review and physical laboratory experiments always remain the essential, irreplaceable anchor that keeps the entire knowledge economy tethered to reality? It's something to think about. Next time you see one of those heavy Wiley textbooks, just remember the paper might be heavy, but the data inside it is currently fueling the future. Thanks for joining us on this deep dive.